worldwide markets this week, everything about tax and donations. The Rand 1830 is the big fight. Sassol results, nothing excites me there. Process buying, just eat takeaway.com. PGMs, still no love. This is Worldwide Markets, episode 620 for 26 February, recorded Tuesday afternoon. My name is Simon Brown. Worldwide Markets powered by Standard Bank, Global Markets and Shift, the global money app, your go-to for travel, shopping, payments and investments in the palm of your hand, all at the cheapest forex rates. Thanks to Standard Bank, Global Markets and Shift for the sponsorship of the show. I want to go lots, but I want to dig around donations tax, because whenever I talk about donations tax, I get some confused folks thereafter who say, I didn't understand. What's the story? How does it actually work? Now, I'm talking natural South African citizens. Beyond that, not my expertise, not what I'm going to be particularly talking around. There are a couple. Firstly, you can make donations to your spouse at no limitations whatsoever and no tax. Now, why would you do that? Well, your spouse might have a lower tax rate. Your spouse might also, for example, not be getting the full interest exemption that is possible to an individual. So there are certainly some benefits to moving between spouses. Certainly, I've done it. My wife and we have moved between our different accounts for, truthfully, investment and tax-efficient reasons. Importantly, maintenance contributions, assuming they are bona fide contributions, there is no tax. That is not a problem at all. We then get public benefit organizations, PBOs. These are charities. In a sense, the good old-fashioned, there might be pets, there might be children, whatever the case may be. They need to be a PBO as recognized by SARS. They then need to produce to you a certificate to prove this fact. And donations to them will then be deducted from your taxable income. A couple of T's and C's. That PBO must give you a certificate to say, hey, Simon gave us $100. Here's our proof there that he did give us the $100. That is critically important. No certificate, no deduction. And you are capped at 10% of your revenue, of your income. You can donate more, but you can only claim back donations to a PBO that is at 10% of your income. They will send you that certificate. It is hugely important that they are registered with SARS. Now, I've never seen a scam in this space, but I can't help but think there must be some scams in this place. The one then that gets people confused is I can donate 100,000 Rand to, you, and there's no tax payable. That's perfectly fine. Each taxpayer can donate 100,000. Now, spouses, as I said, that is not applicable. But if I want to give my sister some money, I could give her 100,000 Rand per tax year, and there is absolutely no problem with it. What is very important, it's 100,000. If I gave my sister more than 100,000, the excess of 100,000 is taxed at 20%, and I pay the tax. That is critically important. If I gave my sister and my friend each 100,000, SARS says, look, you can only do 100,000 donation to an individual per year. Thereafter, there's 20% tax. So the first 100,000 I give to my sister, no problem. I then give somebody else 100,000 Rand. That is above the 100K limit, and there is a 20% tax. That 20% tax, importantly, needs to be paid immediately. You don't wait for the end of the tax year. You declare it to SARS and you go and make that payment. And if it isn't paid, both parties are potentially liable. That is capped at 30 million. Above 30 million, it is 25%. Please, someone give me 30 million. So the short answer is, between spouses, no problems whatsoever. To public benefit organizations, assuming they are registered and they give you the relevant certificate, you can claim back whatever you donated to a cap of 10% of your income. And then to other individuals, the 100,000 Rand is the limit. You can go above it, but you will pay 20%. And very important, someone contacted me and said, well, could I give each of my kids 100,000? The answer is yes. But you're going to have to pay donations tax on it, right? Because 100,000 is free. The second 100,000 is taxable at 20%. You also pay donations tax to your children. In that example, I said, well, if you've got 200K and you want to give 100 to each kid, give 100 to your wife, no donations tax, and each of you donate then 100,000 to your kids or 50,000 each, but effectively you would each be making a 100,000 Rand donation. So there's some wiggle room there. But let's be clear, if you are donating more than 100,000 in a year, you are liable for that 20% tax. And you need to declare it and pay that tax immediately. It's not a tax that you then pay down the line one day, whenever that may be. So Sassol results were out. There were a lot of moving parts. CapEx is coming down. Chemical prices remain under pressure. There were some write-downs. There was no dividend because of the debt, etc., etc. Oil prices aren't helping them either. And everyone was messaging me and saying, is this the moment to buy Sassol? On the day, which was Monday, it was looking not too bad. It had a fairly good day and then did pull back. This is the 3-year chart of Sassol. Scary chart is the 10-year chart, and the scariest perhaps is the all-time chart. And I bought the stock in 94. I paid, did I pay as much as, I thought I paid closer to 16. I probably paid about 10. I eventually got out on one of these bounces, maybe that one there at around 400 or so. And I'm very, very thankful for that. Even the 5-year chart is looking ugly. I did the podcast a few weeks ago and asked if that little candle there for the Valentine's week of February was perhaps a kangaroo tail. Certainly we've had some upside there, and certainly there is some good resistance lurking, but this is not a chart that I look at and get thrillingly excited, and those results equally so. There's a lot beyond management's control, and that of course is chemical prices, oil prices, exchange rates. Those are all beyond their control. There's a lot within their control, and we can debate whether they're doing good or bad with it. I just, what did they earn? I think it was 14 Rand and change. Let's say they did 15. Let's say they do 30 for the year. That is a sub 3 PE stock. The question is it value or value trap? And at this point in time, I think value trap. Now, one day I will be wrong. Absolutely, I will be wrong. I remember this little triangle back here in late 23 when the stock was 250 was looking promising. I remember that little break there in April 24 was looking promising. But at the end of the day, the stock is in a downward trend. It has been since the highs of mid 2022, and I don't see any compelling reason to buy it. And most folks there's a lot of folks who are very, very excited by Sassol, but most of them have buy prices, in some cases, north of 150. I can't get excited about Sassol at all at this point in time. It's a case of, for me, thanks, but no thanks. We had our power hour last week. It was everything ETPs, which is exchange traded products. We were also talking being tax efficient. You'll find the video at justonelap.com/power hour. Always a fun presentation, always worth having a look. We talk tax-free investing, of course, but there's many other ways to be tax efficient. Your interest exemptions, your Reg 28, donations, etc., etc. justonelap.com/power hour. More information, and you can go view the video there. So I was at a Ashburton investments event this morning. Firstly, kudos to them for a 2-hour event, which kept pretty much, I think we overran by a minute. A lot of these are all day. Some of them are 2-day events. And man, it's just too much. My brain goes soft. I have some tea, some lunch. I need a nap in the afternoon. This was nice and short. The gentleman from Morgan Stanley Investment Management, who's Ashburton's offshore partner, and I say gentleman because I have forgotten their name. He said two things that really talked to me. One, he said, margins at record highs and market is expecting more margin growth. That's partly what we've seen from the growth in the US market pretty much since the pandemic, is that margin expansion that we've been seeing. The trick is that they are expecting more margin growth. And how much more can margins grow, especially if we start seeing some tariffs coming through. Remember the Mexico and Canada tariffs were supposed to start 1st of February. They were pushed back 30 days. That is Monday. Now, maybe Trump has forgotten. I don't know. But it is Monday, and we will see. So this first thing was you were saying, you know what, stuff's expensive, and we're not sure how much more headroom he has. But he made another point that I thought was really, really great. He talks about, we want companies that generate great cash flow, that have good margins, that have strong moats, all the usual sort of stuff. But what he said, we're looking for the same thing, but we often find it in different places. And the example he said, advertising. In the 90s, if you wanted a business making strong advertising revenue, well, it was the New York Times. In the aughts, if you wanted a business with strong advertising revenue, it was WPP. And in 2025, if you want a business with strong advertising revenue, it's Alphabet, which is both their advertising as well as essentially their YouTube. And I thought that was really cunning. You're looking for the same thing, but you might find it in different places. And that talks to the very long-term investor in all of us, the bottom drawer stock. And I've long said, I'm not sure that these bottom drawer stocks really still actually kind of exist as bottom drawer stocks, that they still are a real thing. And this says no, that the theme might still be applicable, but the company that therefore fits the theme might not. I really liked it. We're looking for the same thing, but we're going to potentially find it in different places. That I thought was really good. Let's touch on the ZAR. I spoke about it last week. I said that we were potentially looking for a 1720 or perhaps even better. At the moment, what we're seeing with the Rand is that there is a big fight happening at 1830 against the US dollar. We have weakened out to 1838 as I record, 3 o'clock Tuesday afternoon. But I mean, that is your 1830 level. And you can see, since October 22, we have been there repeatedly. And it got there Monday morning, we were 1830. Intuitively, when the budget happened, we started the morning 1840, went out to 1858 or 59, and now we are back in the 30s. That is a big number. If that 1830 breaks, we're going to move fast. We'll go sub 18 quickly, and then Petri Radenhays says 1620. There's a lot more potential strength here. But that 1830 is absolutely the giant level right now. Process announced that they're going to buy Just Eat Takeaway.com for 4.1 billion euros. The market didn't particularly like it. They tried to buy Just Eat before and got nixed by by Just Eat essentially merging with Takeaway.com, and that nixed that deal effectively. Process was trading at all-time highs last week. Is that an all-time high? Yes, it is. Only just, but pretty much back at the Jan 21 levels. But hey, still an all-time high. The key thing is the market is saying, what the heck are you buying? And I got to say, when they tried to do the deal, and to be clear, they were looking to pay more for Just Eat. Now they get Just Eat and Takeaway.com. We can see the price chart of their Just Eat. Just Eat Takeaway.com, but I really want it on. I need a US version. Let's see what I get here. Is that the chart I'm looking for? No, that's not the chart I'm looking for. I can't. Okay, let's ignore that. I'm not going to be able to find it while I'm busy doing a podcast. It's a little too complex for me. No multitasking from me. Excuse me. Cut. Cut. My challenge is with delivery services. Don't get me wrong. I love them and they are convenient, but they are too easy to flip between. Now, maybe there's an exception. As I'm saying that, I'm thinking, hang on, Checkers 60/60. Now, I don't use Checkers 60/60 anymore because I can, from my kitchen, get to my Checkers, buy my good, and be back in my kitchen within 10 minutes. So I'm shopping at Checkers multiple times a week, and it's never a crisis. I haven't used it since I moved a year and a half ago. But when I was using it, I only ever used them. I never used the Woolies one. I never used the ASAP. I tried ASAP once. I tried Woolies once, but 60/60 was streets ahead. But when I look at the Uber Eats or the Mr. Delivery or going direct to my favorite pizza place in DCOs or wherever it might be, there's no real stickiness in a sense. Now, they give you all sorts of perks, but oftentimes your favorite place might not be on Mr. D or on Uber Eats. The prices, I've noticed, are often much higher because there's a 20-30% fee which the app wants, and so the restaurant's just like, well, we're putting that on top. And I'm like, well, whoa, hang on a second. There needs to be a better way to it. But there was no loyalty. What we have seen, and I was chatting with Chantal Marks around this on Stockwatch on Monday evening. She's saying, yeah, but they've got much better at it. They've got a route to profitability now. It was a land grab, and that land grab has kind of happened. And now Processed, make no mistake, is grabbing further. I mean, they offered about a 60% premium to the Just Eat share price. So there certainly is a massive land grab happening in the takeaway space. What we are not perhaps seeing yet really particularly is the sense of, I mean, is there huge profitability? Now, there surely should be. There we go. So it turns out I can kind of to a little bit multitask, so we can get a quick look at the chart. There we go. You can see it was 110, and now it's 20 because, of course, the offer price that is coming, or 19.50, the offer price that is coming through. But this is a tough and potentially low margin space. But Process is on this, and they're like, hang on, no, we're really, really keen for this. We're going to go and buy it. And 4 billion, I mean, what's that? In ZAR, it's close to 100 billion ZAR. They are paying a lot of millions for it. They have a lot of money. So I suppose in that regard, why not? They've absolutely got it. Let's have a quick look at PGMs for two reasons. One, because they are remaining in a horror space. So platinum, there it is there. Show me my squiggles. Let me share the screen. Platinum in of itself is still under pressure, and there is my chart, and we can zoom it out, and you can see I haven't pulled those lines back recently, but low 800s is the support, and just above 1,000 to maybe 1,100 is resistance. Platinum is pretty much sideways. I mean, this is now a 10-year chart with an exception of a collapse out of the bottom during the pandemic, and then post-pandemic a push through the top. It has basically been trading in that zone for a decade. In fact, maybe a little more than a decade. And I don't see what changes it right now. The bigger issue is palladium, and palladium's having a bit of a horror time. It's also been in a tough space, make no mistake about that. We don't need, well, that's the 3-year chart, but palladium really at the bottom side, it's 840-ish. The middle resistance is about 1090, upper side a little over 1200. Palladium under massive pressure this week. The story is that if there is peace in Ukraine, what happens to Russian sanctions? Does Russia become no longer a pariah? And does that mean that Russian palladium, and they are the world's biggest producer of palladium, does that start to flood back into the market? If we zoom this a bit more, we can see the war which started 3 years ago. There was a huge swing up, the war in Ukraine, of course, in palladium. It went as high as, what is that level up there? I mean, we're talking a high of around 3,400. There was a lot of stockpiling. A lot of folks thought this war is bad. Well, of course the war is bad, but it's also going to be bad for palladium. And so companies stockpiled, which means that we've had massive inventories in the channel, and it's just a case of, well, where's the demand? The demand is there, but they had the production already, or they had the stock pile already. If the war ends at any point, if anything, it probably brings more supply back into the market. I'd been hearing rumors that maybe the stockpiling was running out, and this would be good for palladium. At this point, there is nothing I see in PGMs that particularly gets me excited and makes me think that I need to or wish to or have anything to do with palladium at this point. Worldwide Markets powered by Standard Bank Global Markets and Shift, the Global Money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest forex rates. My thanks to Standard Bank Global Markets and Shift for sponsoring our podcast. We will leave it there for today. My name is Simon. We will, as always, be back again next week. Until then, look after yourself, and if you can, look after somebody else as well. Cheers all.